Hello, everybody, and thank you for joining this session of the conference. My name is Michael Mintz, and I'm with AMG Payment Solutions. Today's topic is payment processing, credit card processing, merchant services, and the Durbin Amendment, which some of you may be aware of and some of you may not. The Durbin Amendment had a tremendous impact on the parking world. Again, my name is Michael Mintz, and I'm the Chief Strategy Officer at AMG Payment Solutions. AMG Payment Solutions is a merchant processing firm. We're actually what's referred to as an ISO, an independent sales organization, with a significant niche focus in the United States municipal parking industry. We've been focused on the parking industry for about 10 years now, and we've done a lot of interesting stuff with some really great clients in this space. We utilize the First Data Fiserv processing platform, similar to Wells Fargo, similar to Citibank, similar to SunTrust, and we partner with hundreds of cities nationwide to help them mitigate and reduce their credit card processing fees at their parking meters, pay stations, and mobile payment apps. We work with municipalities, universities, hospitals, and parking management companies, and we're proud to be a recent NCPA awarded vendor under contract number 1146. So what I'm going to try to do today is make the world of merchant services as simple as possible for everyone to understand. And that's a tough challenge because God knows that the merchant services industry doesn't make it easy for you to understand. And unfortunately, that's the way they want it. The less the client knows, the less the client understands about pricing, the more the merchant services provider can make. And that's what happens. It is what it is. So I'm going to take you through the ecosystem of making a payment and kind of what happens. So the customer, they're going to initiate their parking session. They put their credit card into the parking meter or pay station, or it's on file with their mobile app. And they pay for that transaction with their debit or credit card. What happens is that the hardware, software, has a payment gateway hooked up to it. A payment gateway, think of the payment gateway as the bridge between the parking hardware, software, and the credit card processor. And it basically encrypts and communicates, sending the merchant account information through the next piece, which is the merchant account. So merchant account, very simple. It's a type of bank account that allows a merchant, a city, to accept electronic payments. Very simple. In order to be able to accept credit and debit cards, an entity needs to open a merchant account. And there are plenty of entities that do it. A lot of folks probably on this, listening to this presentation, utilize their bank, whether it's Bank of America or Chase or whoever it may be. Figuring that I'm going to get the best deal from the bank that I do all of our other banking. Sometimes that's true, sometimes it's not. I'm always amazed at what we see on statements when we look. So payment gateway, the transaction flows through the payment gateway, through the merchant account. The payment processor moves the payment information, and the acquiring bank moves money. So a credit card processor always has an acquiring bank that they work with. So my example with First Data, our acquiring bank is Wells Fargo. So when a transaction goes out for approval, what they're doing is they're making sure, it's checking to make sure that the individual, right, the cardholder, has either enough credit on their credit card account or enough money in their checking or savings account to accommodate the transaction. If they do, approval comes in, happens in a few seconds. That money gets put aside at the issuing bank. It doesn't get moved yet. It gets put aside at the issuing bank. Later, what's going to happen when the when the parking equipment runs what they call a batch settlement run at the end of the day, all of the transactions from the day get pulled from the various issuing banks, coming into the merchant acquiring bank. In my case, it's Wells Fargo. And then Wells Fargo ACHs the money directly into the customer or the city's bank account. The transaction's complete. And that's basically the ecosystem over the course, for a particular type of transaction. Now, we all know meters, pay stations, there are thousands and thousands of transactions. And at the end of the month, there's a statement that gets created, and there's fees associated with all of those transactions. So the city pays merchant account fees on all the transactions that go through the meters, pay stations, and pay by cell. The problem is that understanding what those fees are is not easy. You'll get a month-end statement, that dreaded month-end statement that most of the time people put on a pile and don't even bother looking at because they don't understand what's in there. And like I said earlier, they do it on purpose. When I say they, the merchant services world does it on purpose. The less you know, the more they can make. And we've seen, Adam, my partner and I have seen many creative ways that merchant services providers have upcharged and, had included fees that wouldn't necessarily or shouldn't have necessarily been in there. So what I'm going to do now is try to give you an overview of what those fees really consist of. So, like I said, at the end of the month, there's going to be a merchant account statement that's going to come, and on it, is going to be all of the fees that occurred in the prior month. Well, every transaction, every credit or debit card transaction, okay, and at the end of the month, all of those fees, they really consist of three components, okay? Component one is the fee to the issuing bank, right? Remember, that issuing bank that issued the card to their customer, they make something on every transaction when that customer uses the card. The issuing bank makes interchange, a word that I'm sure a lot of you have heard, and we're going to talk about it in detail in a little bit. But interchange, all of it, every penny of it goes to the issuing bank. That's part one. Part two is the fee to the card brand, whether it's MasterCard, American Express, Visa, or Discover. Any card with the logo on it, whoever's logo it is, they're making something. So Visa and MasterCard, as an example, they make what's called dues and assessments, 0.13%, 13 basis points, 0.14% for credit cards. I just didn't put it in. And the network fee, there's always a network fee, 0.0195 cents, a little under 2 cents. We'll talk a little bit more about that in a second as well. The third component is the credit card processor. So in my example for AMG, AMG shares that portion with Wells Fargo. I'm sorry, with First Data. I apologize. And in the world of parking, that plus piece is anywhere between 4 and 10 cents per transaction. So you take interchange, the fees to the card brand, and the fees to the processor, put it all together, and that's the total fee at the end of the month. Now, I'm going to go into a little bit more detail on what interchange is. As I mentioned earlier, I'm sure a lot of you have heard the term interchange. Think of interchange as the pure cost to process a particular type of card. And all of these crazy names over here, believe it or not, these are different types of cards. It'd be a whole lot easier if they called them normal names. But what's really interesting is that between Visa, MasterCard, and Discover, they've actually created over 400 different interchange categories, or what they call fee programs, based on card type of merchant. And what's important to understand is that each and every interchange category or fee program has a rate and a transaction fee associated with it. So, for example, if a customer utilized a MasterCard Domestic Merit 3 card, well, the interchange would be 1.58% plus 10 cents, and every penny of it would go to the bank that issued the card to that customer who's now using it at the kiosk or the meter. You'll see that I highlighted or bolded actually three different categories, one here, one here, one here. They have an interchange rate of 0.05% and 22 cents. Now, these are debit cards, and we're going to go into those in a second, but I just wanted you to see how the interchange structure works. This is just obviously a subset of the larger population, but you'll see a range, right? 158, 2.2, 210, and a lot of the transaction fees are 10 cents for the most part. Now, every merchant pays interchange. It's completely unavoidable, no matter what anybody tells you. And interchange is basically non-negotiable. Now I'm going to talk a little bit about some of the pricing strategies. just as a general statement, the only pricing strategy that you ever want to be on is interchange plus pricing. It's the only transparent method, and that's basically what I just described earlier. The interchange is a pass-through. The Visa MasterCard card association fee, it's a pass-through with no markup. And then the third piece, the piece to the processor, that is the plus, right? So put those three together, and that would be how the customer is actually billed. There are two other ways to do it, or there are actually more than two, but the two other popular ways to do it are tiered discount. If you look at your monthly statement and you see the terms qualified rate, mid-qualified rate, or non-qualified rate, that should tip you off that you're on a tiered discount type of pricing strategy. And unfortunately, it's just not that clear, because what happens is that the processors, they decide which interchange categories are going to fall into which of these groupings: qualified, mid-qualified, and non-qualified. They don't tell you which ones are going where. And anything that falls into the mid and non-qualified will have a surcharge on top of it. So, or actually will have a higher fee. So the qualified rate could be, 1.95. The mid-qualified rate could be 2.95, and the non-qualified rate could be 3.95. So you need to be careful and look at this very closely if this is the type of pricing strategy that you have, and ask the right questions to your processor. The other one is fixed rate pricing. This is when you look at your statement, and on the first page you see 1.95% times the total transactions, all the transactions that came in. And that's probably how it was sold. Oh, it's a rate of 1.95. Well, it's not 1.95, because there are some interchange categories that are even more than 1.95. So there's no way that every transaction can be at 1.95. What happens is that any transactions with an interchange rate higher than that 1.95 have what's called downgrades applied. And that's where the fees start to add up. So, not knowing what the downgrades are going to be is completely not transparent. And like I said, the only true transparent way is interchange plus pricing. And for the most part, that's what most cities and municipalities are on. But if you're not, it's something that you should definitely take a look at. Some other fees, access fee, you'll see on a lot of statements from like Bank of America or Wells. Very important. The cost of that access fee is only 0.0195. Well, we see a lot of them at 0.0395 or 0.0495. That means that the bank or the processor is just marking it up. Anything above and beyond 0.0195 is going into the processor's pocket. So you really got to take a close look at the statements, or have somebody look at it that really understands what they're looking at. Off fee, this is typically the plus piece to interchange plus pricing. Like I said, anywhere between 4 and 10 cents per transaction. Sales discount, this is an interesting one. So the plus piece could be just a transaction fee, but it could also be a percentage as well. Just looked at a fairly decent sized city where they were being charged 0.5% plus 10 cents per transaction on every transaction. That's high, really, really high for a city. So you just got to know what you're being charged and understand that, on a merchant account with a super, super high volume, a high dollar amount, well, that percentage makes the biggest difference. Well, on a merchant account where you've got thousands or hundreds of thousands of transactions, well, then the off fee makes more of a difference. So, it really just depends on how the structure of your merchant account looks. Assessment fee, that goes to the card associations. Chargeback fee, you're always going to see a chargeback fee on your statements, either 5, 10, 15, 20 bucks, 25 bucks. You always get charged a chargeback fee per occurrence. But there are many, many fees on these statements that, unless you ask the question, you're not going to really know what they're about or what they're for. And unfortunately, sometimes when you call up your processor, you don't get a straight answer. But, it's all about, asking the right questions and really trying to understand exactly what's going on in your account. Okay, now we're going to move on to the Durbin Amendment. So back in 2011, as part of the Dodd-Frank Wall Street Reform Act, was a piece of legislation called the Durbin Amendment. Senator Dick Durbin was very adamant about this, and the intent of the Durbin Amendment was to reduce the interchange cost, right, component one, to merchants when they accept a debit card as payment. And that's very important. Debit cards are the only type of cards that were impacted by the Durbin Amendment. Credit cards were not impacted by the Durbin Amendment at all. It's only debit cards. Pre-Durbin, the average interchange cost on a debit card transaction was 45 cents. So that component one, the average across the United States was 45 cents per transaction. That's a lot. And the Fed thought that was a lot. So what the Durbin Amendment did is it put a 22-cent cap on interchange. So big difference between 45 cents and the 22-cent cap. But what they did was they said, you know what? It's not just going to be all debit cards. We're going to break debit cards up into two categories. Category one is from banks with over $10 billion worth of assets. They're going to be called regulated debit cards. So issuing banks with 10 billion or more in assets, they're issuing what they call regulated debit cards. And these are all the big money center banks, Citi, Wells, Chase, PNC, right? All the big guys. Their interchange rate is 0.05% and 22 cents per transaction. If you look back here, these are the different kinds of names that you'll see on your statement. 0.05 and 22 cents is what you'll see in the interchange section. Now, unregulated debit cards, so banks with less than $10 billion worth of assets, your community banks, your savings banks, regional banks of that nature, they actually were not impacted by Durbin. They still have a special interchange category, basically what's referred to as small ticket interchange. And that's 1.6 and 5 cents per transaction. So, wow, what a huge difference, right? You get a debit card from Citibank and it costs you 0.05 and 22 cents. You get a debit card from the Texas Regional Bank and it only costs 1.6 and 5 cents. Now, when it comes to parking, the Durbin Amendment really kind of flipped things upside down because that 22 cents on a $1 or a $2 transaction is huge. It impacted, so the Durbin Amendment impacted on and off street parking. It also impacted the vending industry. It also impacted the laundry industry. And what do they all obviously they have in common is that all of those transactions are $8 or so and under, okay? And this is a big number for the banks, right? If you think about it, the issuing banks on these small ticket transactions, they're making a killing, right? 22 cents on a $2 transaction. I'm going to show you a table in a second, but this was a tremendous change to the parking industry. Merchant accounts in parking went from weighted average rates of 5-6% to 8, 9, 10, 12 and up. If your average transaction at the meter is $1, gosh, you're probably paying 20% or more. So here's an example. I mean, here, very simple, right? I mean, on a $1 transaction, $2 transaction, 3 or 4. Here is the interchange before the Durbin Amendment, 7 cents on $1, and here it is after. It's a big difference. So 15 cents difference on every single transaction. Now, that adds up. So the question really now becomes, well, how often do people use their debit cards, or really regulated debit cards, at parking meters, pay stations, and gated parking garages? Well, more than you might actually think. Like I said, we look at hundreds and hundreds of statements, and we see on average anywhere between 30% and, believe it or not, 70% regulated debit card usage. Typically, college towns will see a lot more regulated debit card. Why? Because college kids have their parents' debit cards, and that's typically what they're using. Lower income areas will typically see more debit cards than credit cards. But it was amazing to me and to my partner Adam that how often they're used, and even more so on the pay by cell side of things. You'd think that people would use their credit card, right, to get points, but no, that's not the case. I mean, most people are putting their debit card in for their pay by cell provider. Now, important, and I always get asked this. Okay, so this impacted debit cards. Well, what happened to credit cards? Well, like I said earlier, absolutely nothing happened to credit cards. Credit cards still have a small ticket credit interchange category. I think it's 1.6 or 1.65 and 5 cents per transaction, right? You've got regulated debit cards that have 1.6 and 5 cents per transaction. It was just these regulated debit cards that are now being impacted, and guaranteed, we've yet to see it kind of contrary to this statement, but if you look at your statement and you're on interchange plus pricing with Wells or whoever it may be, doesn't matter. Look at Visa section, look at the MasterCard section. The interchange category with the highest dollar volume and the highest number of transactions is going to be your regulated debit cards. And they're going to have a rate of 0.05 and 22 cents. So very important to understand it, very important to know how your operations are working from the perspective of the merchant account. Understand what your consumers are using, whether it's more credit, whether it's more debit, whether it's regulated or unregulated. And it's important that you look closely at all of this. So what my partner Adam and I all the time, I mean, we spend most of our time just talking to folks and helping them understand why this Durbin Amendment impacted their parking, and it didn't necessarily impact other parts of government. Well, if you think about it, on a $20 or a $25 transaction, heck, the Durbin Amendment was a big winner, right? Anything over $10, the Durbin Amendment actually helped the merchant. It's everything less than $10, and like I said, it wasn't just the parking world; it was parking and vending and laundry. But this is a game changer, a big difference in the world of parking, and it's something that we talk to parking and finance folks around the country, it's definitely raising some eyebrows and getting people more aware of what's going on out there. Okay, so that pretty much wraps up the content that I had scheduled. I didn't go out too long. I tend to find that people fall asleep during my conferences because credit card processing isn't the most interesting thing. And speaking of falling asleep, if you have problems sleeping and you're on Ambien or something, just get a copy of my book and read the first 2 pages, and that'll put you to sleep right away. But no, all joking aside, I actually wrote a book. This is kind of everything you wanted to know about credit card processing, but nobody ever told you. Some of what we talked about today, I'm happy to give it away. Just email me, michael@amgpay.com, or my partner Adam at amgpay.com. We're always around. We love to talk to folks. We'd love to help you understand the Durbin Amendment and then discuss with you how to potentially mitigate it, because there are ways to work through it. And that's exactly what we do with hundreds and hundreds of customers around the country. Thank you very much for your time. I hope everybody is safe and healthy in these crazy COVID times. And I look forward to next year when we can see each other in person and not virtually. Take care, everybody. Thank you for spending time with me. Appreciate it.